Awesome. I just got a house under contract. My agent told me to deliver the earnest money to the title company to open escrow. I just talked to you about my mortgage, getting the process started, and now you're talking to me about escrows. What's going on?
That's right. It's a great question. Let's jump in and find out. So escrow, let me just pull out my phone real quick and we'll just say what the internet says an escrow is. An escrow is a contractual arrangement in which a third party receives and disperses money for someone else. So that's what escrow means. So basically you can open you can escrow
Generalized terminology.
anything. Yeah, it's a general term. And so when you're opening escrow with a title company, you're putting your earnest money down, money that's going to go toward your closing. So they're holding that money until we get to the closing table, and then they'll disperse that money toward your closing costs. When we talk about escrows, we're talking about your homeowner's insurance and your property taxes. And what you can do when you have an escrow account is you can be placing money each month with your mortgage servicer. They're going to hold it for paying your property taxes and your homeowner's insurance. And so that's in addition to your monthly mortgage payment. And so if you're making those escrow payments, those funds are being held in escrow by your mortgage servicer to pay that on your behalf.
Gotcha. Makes sense. So let's pretend just got a house under contract, giving you the executed contract. Help me through the process.
Yeah, so the big thing to know is when you have to escrow. So whenever you're putting less than 20% down, escrows are required. Whenever you put more than 20% down, it's up to you whether or not you want to do it.
Gotcha. So you got options there, but less than 20, I'm escrowing.
Yeah, we've got another video for that. So check that out. We walk through whether or not you should escrow.
Gotcha. So how's this impacting me at closing if I'm escrowing my mortgage?
Yeah, so escrows are going to impact you two ways. It's going to hit you on your closing costs, your cash to close. It's also going to hit you on your monthly payment. So at closing, they're going to collect 2 to 3 months of property taxes to set up your escrow accounts. Now, let's say we're closing in the month of May. Your property taxes are due at the end of
December,
the year,
January, yeah.
December, January. We're going to be missing a few months of property taxes in your escrow account. You'd be short. So the seller always prorates the property taxes. And so regardless of when you close during the year, the seller is responsible for the projected property taxes year to date. So from January 1st to whenever you're closing.
Well, that makes sense because January to when I close, I didn't own the house. Why would I be responsible for it?
Exactly.
Gotcha.
So that's going to set up your property taxes. Now, homeowner's insurance, this is one that gets a lot of people confused, Jonathan. So what you're going to see, whether or not you escrow, you have to pay for your first year of homeowner's insurance up front. Very important. So your house is insured for 12 months from the date of closing. In addition to that, when you're escrowing, you're going to be paying an additional 2 to 3 months of homeowner's insurance.
Gotcha. So that one's for my future insurance. The first year prepaid is for my current insurance.
That's a great way to think about it.
Awesome.
So yeah, again, everybody has to pay this whether you escrow or not. If you escrow, you're also going to be paying an additional 2 to 3 months.
Gotcha. So super important to know how escrows impact your cash to close.
Yeah.
It shows you why.
Exactly. So before we move on this slide, I think one thing that's important to realize is you're prepaying for these items. This is all stuff you're going to have to pay anyways. But by bringing this into your closing, it does increase what your cash to close is
Gotcha.
going to be.
But if I sold my house in a year or two, I have money in that escrow account. Austin, what happens?
Yeah, you get a full refund.
So it's your money.
It's 100% your money, and the mortgage servicer has to refund it. Normally, we see refunds take about 2 weeks.
Gotcha. Awesome. So how's this impact me? Bought my house, closed on it. Now I'm making my monthly payment. How's that impact my payments?
Yeah, this is the main thing most people are honed in on is how it impacts your monthly cash flow. So what they're going to do is they're going to collect a 12th of your annual property tax bill and a 12th of your annual insurance bill and collect that in addition to your monthly mortgage payment. So you'll be making a bigger payment and you're going to be chipping away at it throughout the entire year so that after 12 months, we have enough funds in that escrow account to pay those two bills for you.
Gotcha. So that's why when we're talking total payment with a borrower, we're explaining to them like, hey, here's your actual mortgage payment, your principal and interest, but your total payment is going to include your taxes and insurance.
That's right. And so this is an example that you put together. I think it's a great way to help someone visualize it. Let's say that your total monthly payment, escrows included, is $1,750. In this scenario, we're just saying, hey, that's probably looking like $1,000 mortgage payment. That's going to be your principal and interest. So that's for the money you're actually borrowing. But then in addition to that, chipping away at your insurance and property tax bill, you might be paying $250 a month for insurance, $500 a month for property taxes. This is just to give you an idea of how we get from $1,000 a month mortgage payment to writing the mortgage company or the mortgage servicer a $1,750 check. So you're going to write one check, or you're going to set up your auto payment for one amount each month, but it's going to be for that total.
All right, awesome. It makes perfect sense. Well, tell me, at the end of the year, when my insurance gets renewed or my property tax bill is ready to be paid out, who pays it if my stuff's escrowed?
Your mortgage servicer. As soon as those bills are posted, those things get paid. So
Gotcha.
They take care of that for you.
So I can log into my escrow account and see the withdrawal for taxes and withdrawal for insurance.
Yeah, it's a service that's provided for you, so it's one less thing you have to worry about. And a lot of people will also ask, is there anything I have to pay in addition for that to be done for me? And the answer is no. That is all being taken care of by the lender. And the reason they do that is because it helps mitigate their risk. In the event that you don't pay your property taxes,
that's a big deal.
The government can come in and put a tax lien on your property that supersedes the lender's lien. And so that's why the lender prefers to see you escrowing your property taxes and homeowners insurance, and they don't charge anything extra for that service.
Okay, cool.
So,
yeah, that's awesome. So sometimes people want to have, hey, I want to set my mortgage, everything to be out of sight, out of mind. Like, I'm escrowing.
Easy peasy.
Well, so the next thing is an escrow analysis. So a lot of people aren't familiar with this, but this is part of having escrows, right? Exactly how does an annual escrow analysis work, Austin?
Yeah, so when you are escrowed, that portion of your monthly payment can change from year to year. And the reason is because your property taxes can go up from year to year. Your homeowner's insurance can change at any point. You can change your homeowner's insurance whenever you want to. And so there's always going to be an escrow analysis at the end of the year where they're going to determine, well, really it depends on where your property is and when your property tax stuff is posted. They're going to be evaluating whether or not you've got too much money in your escrow account or if you're short.
Yeah, in Houston, this happens a lot in March or April.
Right,
it's kind of when new tax values go out and things like that. And so what happens if I have too much money in my escrow account? Are they just going to hold that?
They're going to give you a couple of options. So whenever you're short or whenever you're over, they're going to be recalibrating that. If it's a one-time event, then great, they can do that, give you a one-time reimbursement or charge you a one-time fee, or they can push that down into your mortgage payments. And so usually there's some flexibility. You've got options when you're going through your annual escrow analysis.
Awesome. All right, so that's escrow in a nutshell. As a buyer, now I get it. Title is in escrow, but then I get my taxes and insurance are in escrow, Austin.
That's right. So if you need me to hold any money for you, you can put it in escrow with me.
That's right. So anyway, guys, hope y'all enjoy the new format, trying to make things a lot more digestible, using the TV, using PowerPoint. I like it, Bakes.
That's right. I like it too. So remember, we're here to make mortgages simple. We'll see you guys next time.
Adios.